We've talked before. You've used cash in a way that's both defensive and opportunistic. Can you actually walk us through how you think about cash allocation within the portfolio? And then maybe second to that, how has that played out in practice, especially during volatile periods like we've seen 2022? There was a selective rebound in 2023 and then again in 2025.
We aren't market timers, so we don't have the pretense to think that we can actually time the market, but
Right.
we can see what the stock prices are versus what we think the fundamentals are of our companies. And so in the past couple of years, we've owned Brookfield since I think 2018. Brookfield Corporation. Before that, it was Brookfield Asset Management,
Mm.
and they have this big real estate portfolio, and they are dependent on, let's say, markets being less volatile to be able to get their performance fee, so to realize carried interest, basically. And so investors were, in times of market volatility, they just say, we don't think the real estate portfolio and the realizations from the portfolio are going to happen anytime soon. So we'll just put a zero value on that, and we've seen discount levels versus our view of value of over 50%. There were times when Brookfield was over 10% in our portfolio, but there were also times when it was less than 5%. In 2021, when the suddenly when interest rates were zero or even negative in Europe, the discount level was very close to our view of fair value. So all of a sudden, instead of buying a dollar for 50 cents, you were buying a dollar for a 96 or 95 cents. So we were like, that was a moment when we have significantly sold our position in Brookfield, and I would say interest rate sensitive companies overall. So that was a moment when we kind of created cash within the portfolio, and which we were able to deploy then, of course, in 22 at more favorable levels. Truth be told, we should have just sold a lot of these low discount companies, and we held on to a few of them. So we did take a drop in 22. But because of active management in 22, buying these companies, which were, in our view, punished way too roughly by Mr. Market, we were able to get out of that actually quicker. So we've had since every large drawdown. Almost every large drawdown since the strategy has been live, we have significantly outperformed on the upside in the recovery phase.